Hi, everybody. Welcome to Self-Directed IRA Saturday. Thank you for joining us. My name is Zach Wilson. I'm one of the IRA specialists here at Quest Trust Company. So before we get started, got to give you the disclaimer. Everything that you're about to see here is for your educational purposes only. All right. At Quest, we'd like to offer as much as much education that we can to both our clients and investors. That being said, it's important to recognize the role that Quest is playing when it comes to your investments. All right. We will facilitate all the transactions within your IRA, but that being said, Quest does not offer any tax, legal, or investment advice. Now, for those of you who don't know us, Quest is the largest self-directed IRA custodian in the state of Texas. We have over 20,000 active investor clients all across the country. We hold over $2 billion in assets under administration, and we have over 100 employees, 34 of which are certified IRA service professionals. Now, the big one is that as it stands currently, we have over $400 million in undirected cash sitting in our clients' accounts. Guys, this represents opportunity. Whether you're a current Quest client who's part of the undirected cash pool, or you're an investor looking to find funds to get your deal to happen, this is where your opportunity lies. Now, before you make any investment at all, what's always the first step is to educate yourself, guys. Check out our YouTube, check out our Facebook, check out our website. We have tons of educational videos going over everything from the basics of a self-directed IRA all the way to the ins and outs of a syndication of what that looks like in your IRA. All right, you can find any of the resources that you need on there that can answer just about any questions that you have. Now that you've educated yourself and you feel comfortable with the investment that you're looking to pursue, well, the deal's not going to find itself, so you have to take advantage of our networking opportunities. You guys check out our weekly live classes every Tuesday at 12. Our self-directed IRA Saturdays, just like today, every Saturday at noon. Also, our virtual happy hour on the fourth Wednesday of every month. Now, that's strictly networking, guys. That's a perfect opportunity to build relationships with other Quest clients and investors to try and make your deal the best that it can be. But by far, our most popular social event is going to be our self-directed IRA Tuesdays. Guys, these are the socials that we have.
Sorry about that, everyone. It looks like we're running into some difficult technical difficulties. Zach will be back in a little bit to get this going. But in the meantime, if you guys don't mind, I will introduce to you guys John Denza. He will be talking about the investment of cryptocurrency in the IRA space. So here you go. Welcome on. John, how are you doing today?
Great. Thank you for the great intro, and really excited to be here this afternoon on a unfortunately rainy Sunday in New Jersey.
Well, I'll leave it to you. And whenever you're ready, I'll go ahead and throw your slide on. I'll let you introduce yourself, okay?
Perfect. Great. Thank you so much. So a little bit about myself. I'm the Chief Commercial Officer for ErisX. We're a spot and futures digital asset exchange. Prior to my tenure here at ErisX, which I've been here for a little over 3 years, I've always been involved in traditional finance, having worked at exchanges such as NASDAQ, BATS, CBOE, and Instant back in the day. My efforts have always been focused on sales and account management, having worked on the equity and options sales teams. And then I would say roughly about 7-8 years ago, I stumbled upon crypto. It was actually my wife that had found Bitcoin and Ethereum and started talking to me about it. And coming from traditional finance and watching those asset classes mature over time, I felt looking at crypto, we're really in our early innings of the potential of what this could be and where we can go with the product. And I just fell down the rabbit hole and just absorbed and sucked up everything that I could about the space. And then about 3 years ago, I had the opportunity to join ErisX, leading their sales efforts and business development. And then just recently, for those that might have seen this in the news, there was some great news that came out that CBOE, the Chicago Board of Options Exchange, had actually completed their acquisition of our exchange on Monday of last week. So really exciting times. And I think for the larger audience, this should really speak volumes of how the space is really maturing and how some of these other traditional players like a CBOE, who's got a market cap, I'm taking a guess at this point, of 12 to 14 billion, and them seeing the potential of crypto. That's why they made the investment in ErisX. because they saw it as a great future. With that, I guess we could probably dig right into the slides if that works. Can I start going through them now? All right, I guess I will take.
Hey, John. Hey, John. Sorry about that. We had some technical difficulties. Yeah. So your slides up? Take it away.
Perfect. Thank you so much. Let's dig right in then. All right. So, people ask all the time. They say, what is Bitcoin? What is it, and so forth. Well, let's take this example. Most of the audience has probably gone to a Starbucks at some point or time in their life. It's morning time. It's 8:30. You're looking for your caffeine jolt, and you go to Starbucks and you order your venti latte. Comes up on the screen. It's going to be $3.87, and they're expecting payment. Well, let's say at the time you don't have cash on you, but maybe you have a gold bar in your pocket. You put the gold coin or bar on the counter. The barista is going to look at you and they're going to think you're crazy. How are they going to make change out of a gold bar? How can a gold bar or something like a precious metal be divisible? Even though it's a store of value, how can you make change and how can you actually process it? It's really difficult if you think about it. Well, that kind of lies into the beauty of what crypto is it being a store of value. It's really quite similar to almost how you could withdraw money out of a bank account too. Similar concept where if you have Bitcoin, it's in a wallet. If you have cash, it's in an account. Both of them have stores of value in them, but the gold bar is not divisible. It's impossible to make change with that or use it from a practical standpoint. So think about it this way. A lot of you probably have your Dunkin' Donuts app or your Starbucks app right on your phone, and you go to the counter, you flash that little barcode, it deducts the $3.87 from your account. Well, the same thing applies with crypto. Some people have this misnomer that they think, oh, crypto's trading at 36,000 right now. I would have to buy a full Bitcoin to be able to be involved in the market. That's not necessarily true. That's the beauty of the product is the fact that it actually goes out to 8 decimal places. So, the original thought being with the inception of the product was how do we account for growth of the product of the coin, Bitcoin. And that's why they actually set it to 8 decimal places, because over time there's this vision that it'll actually be a store of value that's used in everyday purchase of goods. And if the value rises, then you're going to have to be able to break things down into fractions of a Bitcoin. So there's the kind of the comparison between gold being a precious metal and a store of value and Bitcoin being a store of value. You could just basically show that similar barcode and it'll deduct it right from your account. So, some of the concepts that we're going to talk about today include crypto and blockchain, and then a brief overview of ErisX at the end. So a lot of people wonder, what is blockchain? It's definitely not this guy with the Lego house with all these blocks. It's really simple if you think about it. What it really is, I like to use this analogy, is, it's a store, I should say, it is an immutable, it's like taking an Excel spreadsheet and using it, see if it's on the next sheet, yep. Think about an Excel spreadsheet where everybody is making updates to the Excel spreadsheet. Everybody on this call has access to the Excel spreadsheet. They make updates. Everybody can see it in real time. And the beauty of blockchain and what's special about it is, as it's noted at the top of my slide, is it's immutable. It means that when you make a change to that Excel spreadsheet, you can't go back and rewrite time. It's immutable. That footprint is kept forever. And because that's locked in place and nobody can change it, that's what makes it so special, blockchain. It really is, and from an overview concept, that's really how simple it is. That's the overarching concept of what blockchain is. So we touched on before what Bitcoin is. It's technically a store of value. And then you've also heard of the concept of a smart contract, which is the most common coin that you've probably heard of in the past, is Ethereum. They're a smart contract. The two of them differ. One is a store of value. I want to purchase this coin and buy goods with it for 36,000. Or Ethereum, which is like an underlying technology that all of the other blockchain products, a good amount of them, I would say probably 80% or more, are built upon, which is this smart contract Ethereum, the protocol. Oops, jump ahead here. So the audience has probably heard in the past of concepts of decentralized versus centralized finance. We're just going to break it down and simplify it for the audience right now. Decentralized finance means peer-to-peer. It means that two people can interact directly with one another without an intermediary. Centralized finance is actually a central location. So a good example of centralized finance is, most of your audience is probably invested in equities at some point. They go to the New York Stock Exchange or NASDAQ. They might buy Microsoft. Well, the exchange is actually, the servers and technology are centrally located so that everybody that wants to buy Microsoft is routed into the matching engine. The matching engine makes a decision. You have an execution that comes out the other side. Decentralized finance is actually removing that intermediary in between. It's like basically saying that I want to, let's say, purchase goods directly from somebody else that's on the network. Here's a great way to think about it and how it could be used in another concept. Let me just double check here for the slide. Let's look at it. I'm going to compare it to a vending machine. So it's late night, you're at a hotel, you're kind of hungry, you want to go and get a snack, you head down to the corridor to the machine to get maybe a pack of combos that are in the machine. So first you put in 50 cents into the machine. This is how a smart contract would work. You put 50 cents into the machine. If the combos are $1, you hit A4, nothing happens. It just hangs there and the money's in the system and nothing happens. Well, then you put another 50 cents in, you hit A3, boom, the combos drop. Well, that's really how simple a smart contract works. You're basically giving it, if I do this, then this should happen. If I put the $1 into the machine, if I hit A3, then the combos will fall. Well, that's what it is in a smart contract. You're basically wrapping up certain commands and hoping for at the end an output. And those commands have to be exact. If they're not, then you're not going to produce the results that you actually are looking for. That's really, if you're going to break down how a smart contract works, that's really how it's shaped and handled. Now let's take it from a different concept and even more overarching that the audience could understand. A lot of the audience has probably purchased a home at some point, and they know the challenges of working with a bank, having to create all the paperwork, dealing with the bank, hoping to get the best rate, going through the title search, all these different pieces. And in the middle of this is the bank, which kind of goes back to my concept of centralized versus decentralized. The centralized party in this concept would be Bank of America, Wells Fargo, Chase, whoever it may be you're applying for the loan to. They're the central body in this. Well, what if in a new world that where I can actually deal directly with the lender and remove that intermediary from the concept, from this whole equation? I mean, you could basically take a smart contract and remove all of the friction and potential for human error, where I can actually, instead of having to go to Chase to get my loan, maybe I'm working directly with the lender. That potentially reduces the cost, like I said, the friction, and the potential for human error. I could wrap up into that smart contract the rate, the title search, all the necessary documents to purchase the loan, and package it up so that it actually is one tight contract, submitted and approved. And then I'm probably at the end of the day, because I'm removing these extra layers, the cost of my closing is most likely going to be faster. And it's also going to be, the fees are going to be less because there's going to be less people that I'm going to have to depend on for helping me close my mortgage. It's really, if you're going to think about a smart contract, this is how you would forward think about the potential of what this could actually unlock in the future. The next is, I'd love to touch on storage. We work with a custodian at ErisX called BitGo, and ErisX being an exchange and clearinghouse, we actually store those coins for you in our storage device that we have here that's integrated deeply with BitGo. Just a second here. Oops. So little color on BitGo. It's one, it's a trust company. They're actually regulated in the state of South Dakota. They also have a $100 million insurance policy. God forbid anything goes wrong, theft, hack, nefarious activities. They have a protection up to $100 million. Also, ErisX has actually taken significant steps to ensure your security as well with the storage of your coins. We've actually completed a SOC 2 Type 2 as well as a Type 1. Those are audits that are performed by ErisX, or I should say an outside auditor, to make sure that the compliance and security of customer accounts are at a level that they should be to protect those accounts. So that process, I would say from end to end, preparing and submission, Probably took the firm about 6 to 9 months. So it was a huge milestone that we were able to accomplish. In addition to BitGo's insurance policy, we also have our own personal insurance policy. And then also in addition to that, there's a certain process on how we allow coin to come in and actually be stored inside of ErisX. First off, when you're depositing coin in, you have the clearing member wallet. That's your wallet that was created here at ErisX. You would actually deposit coin from your external wallet into ErisX. That coin is then going to be placed into storage. First, it's going to go into a warm wallet, which is a type of security. It's not full security as a cold wallet, which is air gapped and not connected to the internet, but it's on its way through to cold storage. Cold storage really is, it's it could be confusing to some of the people online, but really all it means is it's disconnected from the internet. So it's air gapped. So you put this into, you secure it on a device. It could be a Ledger, a Trezor, or other ones that are in the market. You take your coin, you store it on that device. Then you can actually take it off the internet, put it in, place it into a safety deposit box. You could put it in your safe at home. It's protected in that regard. It's not on the internet. It's extremely difficult, if not impossible, to access that coin because it's completely disconnected. Now, if you're the end user and you're the one that wants to actually start using your coin again, what would happen is we would actually move those coins out of the cold storage into hot, and at that point, they're readily available. Now, when you're actually trading on the exchange, I don't want you to think that there is a delay in being able to access your coin because there's always a percentage of coin that's left in a hot wallet. It's a small percentage so that it's almost seamless to the end user. There's no delays with being able to place a trade or purchase and so forth. A lot of the audience always hears about this concept of mining in cryptocurrency, and they could be overwhelming at times and confusing. But really what happens with a miner is they serve two purposes. The first purpose is actually solving a complex equation, which is a new block. So what happens is that the way that the logic or the white paper was created around Bitcoin is there is going to be a certain amount of coin that's going to be made available every 10 minutes. And it's on basically a slope. So every certain amount of years, there's a halving event. So I would say I think maybe a year and a half, 2 years ago, every 10 minutes, whatever miner was able to solve that complex equation first would actually be given a reward of Bitcoin. And I would say 3 years ago, it was roughly, I think, 12 Bitcoin. And then about, I should say a year and a half ago, we had a halving event. It moved to 6 Bitcoin. And think about it. What's happening is that you are decreasing the supply of Bitcoin because there will only ever be 21 million Bitcoin ever created or minted. And I would say that tail, because of those halving events, actually the last one that'll ever be created, I think goes all the way out to the year 2140. Right now, every 10 minutes, somebody is awarded 6 Bitcoin for solving that complex equation. And think about it. There's all these mining rigs around the world. They're all racing to solve that equation at once. The other role of the miner is to actually approve transactions on the blockchain. So if I wanted to send, crypto to a family member, if I have 1 Bitcoin and I want to move it from my wallet to my brother's wallet and he lives in California, then what I can do is actually put his wallet address into my wallet, into wherever I have my coin. Let's say it's in my ledger, or it could be on exchange. I enter that account information in because that's my brother's account in a different wallet. And then I hit send. And then the money's moved, that coin moves across the country technically and is sent over the blockchain to his wallet. That movement of almost coming out of the wallet, being placed on that toll road, let's say a highway, and the movement to the other wallet is managed by the miner as well. They validate the transactions on the blockchain. And as a result, they charge a very small nominal fee. And even take it a step further, as you can imagine, you hear about, the miners have this carbon footprint and they eat up all this electricity and so forth. It's really a very sophisticated industry if you think about it. So, for example, when there was not these overarching issues in China with regulation and so forth, during the rainy season, the miners would actually set up equipment near dams and so forth because there's all this excess electricity coming out that they could basically tap into. In the US, in the Dakotas where we're mining for natural gas, they were giving off methane gas. So a lot of miners, what they'll do is they'll actually create generators that can take in that methane gas, and then that'll drive all of these mining rigs to actually try to solve those equations for the blockchain. Now, another concept that a lot of the audience has probably heard of before online and so forth is you hear of the Bored Ape pictures online, that you could buy this NFT, a non-fungible token. There was this picture, I think, that was sold maybe 9 months, a year ago, that an artist had created that I think was sold for maybe $33 or $40 million. And what really a non-fungible token is not necessarily just having to be artwork. It's anything that you could think of that can actually be converted into technically a smart contract in a sense. So that NFT is a smart contract. So, for example, how I have here is baseball cards. If you want a Mickey Mantle or Roger Maris or Babe Ruth baseball card, let's say it's worth $1 million when you purchase it. What you could technically do is turn it into a non-fungible token and then sell portions of that to other people. So maybe I elect to have 20 portions of that card broken up so that each person has to put in a certain amount of money for that portion of the coin. And then what they can do is then you start to create a market, and if there's interest, then your portion of the coin could actually go up in value, and it becomes a trading market as well. So for example, I included here the Mona Lisa. If you have rare artworks, you could do the same thing. And even real estate, you're seeing a lot of projects now, especially on the commercial side, where they're trying to tokenize it or create a non-fungible token of the product, and they're trying to sell off pieces to the general public. It kind of goes back to a little bit what I was talking about, DeFi, decentralized finance, because you're not necessarily going to the bank and taking that loan to purchase that property or those other goods or the artwork or the memorabilia. You're actually working with other peers as lenders who are interested. They want to create, maybe have an investment in something that they couldn't potentially afford themselves, but now they're able to buy a portion of it and say, hey, I own a Mickey Mantle rookie card, or I invested in this high rise. So this all ties into the new concept of Web 3.0. Another concept that some of the others that the audience might have heard of before is stable coins. It's a great product in the sense that what you can do is you could basically, it's like creating, let's say you have the US dollar. The US dollar in a stable coin are mirrored to one another. They are pegged to one another so that you can actually think about it. If you're trying to move dollars from one account to the other, there's a lot of friction there, and it takes time, and you're depending on the bank, and you have to pay their fees and so forth. Well, the stable coin, if I convert my dollars into a stable coin, let's say like a USDC, I can then quickly move that money around the world or to whoever I need to in just a mouse click, basically putting, like I said before, a wallet address into your account and hitting send and moving it. So here's another example of one that similar but a little bit different. A lot of the audience has heard of Ripple or XRP. Well, XRP is under review right now by the SEC, but I just want to talk about a concept which is applicable here to stablecoins. So one of the benefits of XRP is it's the movement of money and reducing the friction. So people that want to move money internationally through the SWIFT system, it's a very cumbersome and old system. So there are times where you can actually, if you're trying to move dollars, you can actually pay up to 1% of the total value of what you're trying to move. Well, that's obviously very costly, and it can also take up to 5 to 7 business days. There's examples of people using Ripple, and it could be applicable to stablecoins too, where they'll move $30 million of Ripple in less than a minute, with basically technically seconds, and do it for under $1. Think about that. That's really kind of a challenge to the banking system if you think about it, because you're basically doing something that's more efficient and reducing the friction, like I said earlier, and for a fraction of the fee and faster. So this is, if you're thinking about the future, stable coins really are a benefit to the potential of the banking system. Some people also talk about, oh, I'm so worried about investing in crypto because there's, bad things can happen and I'm going to get hacked and this and that can happen. Well, think about it this way. If you have some bad actors, let's say, people that are doing things they shouldn't be doing and they're moving dollars. Well, if you think about washing dollars through the system, it's really somewhat simple and difficult to actually follow and trace. Of course, the FBI and other, regulatory groups will have their tools and so forth, but they've got to really do some digging to identify the movement of the cash. Well, it's a little bit different when you're dealing with cryptocurrencies, because as I've talked to the audience already, we all have a wallet. So you're moving from one wallet to the other. It basically creates an audit trail. So you could quickly go back and follow the movement of cash or coin throughout the system and tie it back to the original wallet if you had to. Kind of, some of the audience might remember about a year ago in the Southwest, where the fuel stations and movement of fuel in the Southeast was actually delayed and held up because somebody hacked into the technology, the logistics software that moved the fuel to other fueling stations. Well, eventually, a very short period of time, because they asked for cryptocurrency and to be paid in crypto, they were able to trace down that hacker within weeks, if not 2 weeks, because they were able to track it down back to the wallets. So it really, there's this misnomer that there's bad actors involved with crypto, but if you really dig deeper into it, it's actually cleaner and easier to follow and trace the movement of coin than rather movement of cash. So I'm going to take a pause there and would love to see if some people from the audience might have some questions about crypto or blockchain. I'm going to hit escape from here and maybe I could see some of the people from the audience. Could you maybe stop sharing for a second?
Oh, no, you're good right there. That's fine. So I can actually I can throw the questions up there. Right now, it looks like we only got one, and it's from Ram Tanetti. Just asking a real general question: is it good to get into Bitcoin? I just want to hear your opinion on that and kind of how what you'd like to say about that.
Yeah, I mean, I really think that there's tremendous promise in Bitcoin. It's kind of one of the reasons why I got involved, and I was going to touch on a little bit later why I think that there's massive, why I think the coin and the industry will be maturing and excelling. But I mean, really what it comes down to, is I'll be touching on a little bit later, is the market's maturing right now. Names that you did not hear of in the past 2-3 years ago are now getting involved. Like, for an example, Bank of New York is the largest custodian in the world, and they basically store institutions that custody their assets. If you took all the assets that are in at BNY, it's probably dropped a little bit with the market correction, but it's roughly 40 trillion to 43 trillion in assets with a T. And they personally do not have a desire to get involved in crypto, but what's happening is their institutional clients are telling them, you know what, we want you to provide services to custody the coin. We want you involved in this. And that's what's happened. Near the tail end of last year, they said that they were going to actually start being able to store coin and support the asset class. And I'm going to dig into mass adoption a little bit later in the slide deck.
Perfect. Yeah. And so, guys, this is, I know with that, the importance of these, you ask is it good? There's obviously inherent risk in any investment that you make ever, right? That's something across the board. But what we can do is just provide as much education as we can. That's why we have people like John come in to offer that kind of education. All right. We have another question from Ron Tanetti saying, will it ever replace the dollar?
I don't think it'll ever replace the dollar, but I think it will definitely have a home amongst those as a store of value. Just like I think that there's a home for gold, and that gold should fit into everybody's portfolio. I think that if you're going to be looking at having a balanced portfolio, it makes sense if you have equities, maybe real estate in that portfolio. Precious metals might be 2 or 3%. You should really think about actually adding maybe 2 or 3% of crypto in there. You want to be involved and be active there. And as it plays into with the institutional adoption that I'm talking about, and also think about it, what I mentioned earlier in the presentation, there will only be 21 million Bitcoin ever mined. And at this price point where we are, yes, it is high maybe from where it was, but think about the potential of all the people that could be involved in crypto. Even take it a step further. El Salvador made it legal tender. There are other countries that are coming online where there's hyperinflation, and they see this as a store of value. And even to take it a step further, you know, as I was talking about stable coins and so forth, what happens a lot, especially in South America, is they use what's called these coin rails. So if they have family in Brazil or other countries where there's this devaluation of their own currency, they're sending them Bitcoin or stablecoin to use to survive in those countries. So hopefully that answers his question.
Absolutely. And one more, we have from Lynn Rothberg saying, how soon do you think you'll have more choices, and will there be any staking options in the future?
Great question. So as ErisX was going through their acquisition by the CBOE, prior to the launch or prior to the news back in October, we had plans to launch Aave and Link. They have been approved. We have a very stringent coin listing policy here at ErisX. And those coins were approved. The news hit about CBOE acquiring us, and there were concerns that, you know, that if we started adding coins while we were going through the acquisition, that it might come under the radar of the SEC. They might potentially interpret something we list as a security, and they said, please pump the brakes and just wait for the deal to get done. And right now, we are full steam ahead on listing new coins. I would, you know, the goal right now, fingers crossed, if everything works out correctly, is Aave and Link will be listed on June 1. And then we plan to hopefully start adding 2 to 3 coins a month so that by the end of the year, we'll have another 20 coins listed on ErisX.
Awesome. Awesome. So we'll go ahead and let you get back to it, guys. We're going to run another section of Q&A at the end of this, just so we can address any of your concerns, any of your questions. But for now, John,
Perfect.
Take it away.
Okay, so what I'm going to do is I'm going to walk the audience, won't spend too much time, but just want to give a little bit of color on ErisX, how you could basically be onboarded, execute trades, and then I love to include a section on mass adoption on where I think the future of the asset class is going.
Perfect.
So let's dig right in. So first slide is a quick overview of ErisX. Basically, the firm was founded back in 2010. They had come up with an interest rate swap futures product that was under Eris Innovations. Fast forward, they end up licensing the IP to the CME. But when they started trading those products, they had to actually petition the CFTC for what's called a DCM, which is a futures exchange medallion. So they're able to trade futures, but they can't clear them because they need to have what's called a DCO. At the time, the CME had that DCO, and that's why they ended up selling them the intellectual property. Now they're left holding this futures exchange medallion. And the original cap table, part of them were involved in crypto already. And they also understood at the time that the challenges of the space, because, you know, I personally have been trading on these foreign exchanges where their KYC AML procedures, and God forbid something went wrong, my ability to follow up or do anything or advocate change was limited because of the regulatory structure. So they recognized the need for transparency, compliance, and regulation. They went out and built a great cap table, which I'll show on another slide. And they ended up building this cap table. And next thing you know, in April 2019, we launched our spot market. A couple months later, we end up getting approved for that DCO. So now we're actually holding a futures exchange medallion, and we're basically a derivative clearing organization, which allows us to clear futures contracts. Over, I would say, December of that year, we launched our own proprietary matching engine technology, so we don't outsource that. And we also put up our first physically settled futures trade. Over the year and a half from there, we started to go out and get all the money transmitter licenses, which are a challenge because each of the states are different, including, which is very difficult to obtain, is the New York FIT license. That allows us to conduct business in New York. We also got approved for ETH futures before the CME, which they actually used our rule filing to leverage on their exchange. And we also put in, or I should say, we launched cash settled futures. Fast forward in, I would say, the fall of 2020, we started working on our margin application with the CFTC. We submitted it in December of 2020. And then in October of 2021 was the announcement that CBOE would be acquiring ErisX. And they really, one of the drivers to that acquisition was they really saw the potential in what we can do from a margin standpoint. Being able to have not only spot, so if you look at a Coinbase or a Kraken, they're just strictly spot, where I want to buy Bitcoin for 35 or 36,000. We actually have both of them on the same platform. So we're uniquely situated compared to our peers. As I mentioned on the previous slide, prior to the acquisition by Cboe, which we are now Eris X, also we're being referred to as Cboe Digital. I'm still getting used to that new name, but the original cap table really speaks volumes of what the industry, why they would want to invest in a company like us. They believed in us, and they really believed in our potential. So you have companies like DRW, Susquehanna, Virtu, which is a publicly traded proprietary trading company. If you're going to look at, let's say, from the mining community, Bitmain is one of the largest miners for crypto. And even DCG, Digital Currency Group, for those of you that bought or purchased GBTC in your portfolio, they're the ones that actually have created that product and the ones that are petitioning the SEC for an ETF. Also on the exchange front, we had CBOE, CME, and NASDAQ. But the piece that really, with my experience and what I've done on the exchange space, when you're building out an exchange, you don't want all sophisticated people trading with each other. You want to have retail and sophisticated. And the reason that I say that is because what happens is those liquidity providers are creating very tight markets on ErisX. So the end user, the retail participant that's coming in and trying to execute those orders, is they're going to be getting the best price possible because they're all competing for your order flow. The next slide is really kind of talking about the future and the evolution of the space. And it kind of goes back to the question of, where do we see the industry going? And when you launch an industry, you think about it from crypto 1.0. And as I was touching on before, there are these spot markets. I was trading on 2 or 3 different foreign markets. Those are unregulated exchanges and they're offshore. I was working with some regulated exchanges. There's a lot of uneasiness and uncertainty about what the industry was. Now, as it matures the industry, and I think of crypto 2.0, you start to create products like derivative products and ETFs. When the institutional community wants to come in and they're looking for a mature industry, they're looking for ways to limit their risk. And how do they do that? By hedging with derivative products. And then also, crypto 2.0 is really about the ETFs too, being able to allow the general public to go into their brokerage account or their retirement account and to buy these products. We've already seen some of them come out right now from ProShares and others, but we really haven't gotten to a place with ETFs where they need to be, because those ETFs that are in the marketplace right now are based off of the futures price, when you really want to be looking at the underlying price itself. So there's more to come on the ETF front, and I think, it's just really amazing how far we've gone in just even a year's time, and how the regulators are starting to look at these products. And then, also we touch on how I said earlier about the more mature markets having, in the US, you having to pursue money transmitter licenses and so forth, which means that I'm regulated in all of the states, which I'll also be touching on shortly. Here's the coins that are listed on ErisX. As I mentioned to the audience earlier, we really are making a tremendous push now that the acquisition by Cboe is completed to start ramping up and listing our coin count. So the goal is, like I said, Aave and Link, June 1, and then I have a series of 15 to 20 different coins that I am going to start moving through the system and try to get listed on ErisX as fast as possible. Oh, the other question before I forgot to answer, now that I think about it, was staking. One of the goals that I'm trying to work on right now with my roadmap is to actually add staking to it. So more to come on that front. I don't have a lot of color yet, but I know that there's client demand, and it's really something, especially in the retirement accounts, I would love to offer, where they could actually, we could store that coin for them and they could actually generate some yield out of it. Just an overview of ErisX. We're a central limit order book similar to a New York Stock Exchange or a NASDAQ. We touched on the proprietary matching engine technology. The other piece that the audience should know is the market, because of the way that the market works and how it's international and global in a sense, is it's open 24/7. We have an exchange and a marketplace that is live and trading 24 hours a day. Also, we have talked about the wallets. Oh, the other piece I wanted to touch on, speaking of the 24/7 nature, is a lot of what happens at some of the other exchanges, and I don't mean to speak negatively of anybody, is it could be a challenge to get a hold of people on the operations or customer service groups. You know, you might have to send a note in a chat box or send me an email, and maybe we'll hear back from you in a week or two. It's different here at ErisX. We actually have a market operations desk that you can actually get on the phone, call them, and they'll answer your questions. And our market ops group, because of the nature of our exchange, is available 24/7. Our client service group, you can actually pick up a phone with them and they're going to answer your questions about onboarding. They're available Monday through Friday, 7 to 7 Central Time. What's unique about ErisX, and it's different than some of the other exchanges that I touched on before, if you look at a CME who has the Bitcoin futures backed, who has a physically settled Bitcoin future, Kraken, Gemini, or Coinbase, neither of any of those participants are federally regulated and state regulated. So we're in a unique position because we've got spot on our market, and because we hold the DCO and DCM, we're federally regulated. So not only do the states come in to audit us on a regular basis, but we also get audited by the federal government because of our, regulated entity being under the CFTC. So when you're considering different exchanges, it's almost at a point that we are, I love to say this, but I almost get the feeling, even though it's impossible to be, but we're almost over-regulated because we have these federal licenses and state licenses, and it puts us in a unique position, and hopefully it gives the audience a little bit more of a sense of security with the exchange that they're actually conducting business with. Just some additional information about how we're regulated by the CFTC, and we also have a clearinghouse, which is a differentiator because of our DCO. And then this is the map of all the states that we have coverage. Virginia is just pending. We'll hope to have that very shortly, but we're covered with 51 states and territories. Just for the audience, if you decide to make an election and invest in crypto in your account, you would actually go through the onboarding process and would be set up as a self-directed account. Going through the portal, you'll be asked to provide, government ID, picture of yourself, liveness check, we call it, some KYC questions, and it would go to our onboarding team. They would review the application. Once it's reviewed and approved, it would actually go back to Quest Trust to review and sign off. Once they do that, we will then send the end user credentials to log into their portal. This is what the portal would look like. The portal will have your coins that are available, dollars that are available, and then also for some of those on the, that are listening right now that might feel a little bit intimidated by using a more sophisticated front end, which I'll touch on in a second, we actually offer a quick trade widget. So let's say I've got $1,000, I want to buy Bitcoin, I want to purchase as much as I can. You could basically use right off that home screen, the quick trade widget, say I want to buy $1,000, it'll tell you how much crypto you would buy. In this example, as you can see in the fine print, it would be 0.0178. Then you would acquire that once you hit buy, and it would show up in your portal here as one of the assets you own. Same thing we were talking about. We don't necessarily have an app for your phone, but we've actually sized it perfectly for Apple and Android. So this is how it would actually appear on your screen for your phone. Now, for those that want a little bit more of a sophisticated front end, I'm just going to toggle up here for a second. There's this little trade button here at the top right-hand corner. So if you wanted a little more robust front end, this is what it would actually look like. And if you went to erisx.com and hit View Exchange, that's live streaming data. That is the same thing you would see here. It's we've got an order entry ticket here to be able to submit orders. You've got a book of bids and offers here. We've got some simple charting in the middle. This is your trade history, the executions that are coming across the exchange. The bottom would actually be a list of working orders and executed orders. And then your coin limits or coin positions would be listed here on the left. We've actually taken it a step further, and we've added a little bit of some features in there. So it's like order types, I should say. So for example, we created a algo orders. This example is a pegged order. The pegged order basically works where if you have the market and you want to do an offset and you want to follow the movement of the price, you could actually put in, let's say, an offset here of 1. It'll actually position your order 1 away from the inside price, and then you would put a limit so that the market would move into your limit. If it goes through your limit, then it would actually shouldn't say cancel the order, but it would no longer be working. If it floats back in, then the order would become live again. Same thing that we were talking about, but in the mobile version and how it would be sized and how it would appear from mobile. And then, one of the differentiating factors, as I mentioned earlier, is the fact that we run an exchange and a clearinghouse. And that clearinghouse is really a unique place because they're sitting in between all the buyers and sellers on our market. They're performing the KYC AML, and they're supporting the movement in coin and dollars throughout our system. And it's a regulated entity. So I love that this is one of my favorite parts of the discussion here is mass adoption. Most of the audience might remember We Are the World from back in the day. I know as a young man when this song came out, but let's think about it. So where do we think that the industry is going? So let's touch on people's concerns about volatility. Oh, crypto moved, 3 or 4% today. It's a volatile asset. I'm not sure I want to get involved. Well, think about some of the technology stocks and try to compare them. I think if you look at Tesla, it's a perfect example. So Tesla back in, I think it was about 2 years ago or so, they were actually, say March of 2020, just 2 years ago, a little over 2 years ago, Tesla was trading around $85. Just checked this morning, it's just under $900. But it also went through a 5-for-1 split. So think about that. It's maybe trading at 50, 52x from where it was 2 years ago. Well, if you're going to look at it from the same time period, at that same time, Bitcoin was trading at 6,300. Now it's around 36,000. That's a 6x jump. Think about that. Tesla jumped in the same period 50x, while crypto moved 6x. So this misnomer about volatility and not being a safe asset class, it really is. And that's why these derivative products, what they do is they protect us from these volatile swings too, because they're almost creating a hedge for the movement of the coin, which actually shows to the maturation of the product. Also thinking about it too, you've got companies like Fidelity and the tremendous brand around Fidelity saying that not only are they involved in crypto, but they're filing on an ETF as well, which really speaks volumes because of the reputation that they have and where they think that the industry is going. And I touched on BNY earlier today and how they're actually the largest custodian in the world and how they're being involved in crypto. But even I always like to think about this too. There are lenders out there. So if you have coin and you want to try to generate yield, you would go to maybe, let's say, a BlockFi or a Celsius. And back in the day, you could actually, basically deposit your Bitcoin with them, and they would offer you maybe 6-7% on your Bitcoin that was there. Well, that was maybe 2 years ago. And over time, their fee schedules actually changed on what they would pay out on interest. Now, I think, after multiple iterations and changes, and I haven't seen it recently, but one of the last iterations I saw was they were down to maybe a quarter of a Bitcoin with them would actually generate maybe 4%. So we went from 1 Bitcoin at 8% to a quarter of a Bitcoin that's actually generating a yield of 4 to 5%. Well, John, what does that mean? That means that volatility that was in the market 2-3 years ago, where somebody thought, hey, I can borrow this coin at 8 to 10% and then maybe flip it and turn it and trade it and generate maybe 30% yield, that's gone because those wild swings in the market aren't there like they used to be. And then I'll end on this note, two different notes I wanted to end on. One, the news that PayPal was going to be involved in crypto really was a pivotal point in the industry, because prior to that news, there were roughly about 100 million wallets ever created to store crypto. Overnight, 350 million people now had access to crypto. 3.5x of what the wallets were now can access and invest in crypto. And if you factor in, let's say, like Venmo also doing the same, well, another 70 million people are now involved in crypto. So with my closing, I just want to say is, I touched on how, there's a limited supply. There's only going to be 21 million crypto Bitcoin ever mined. If we held, 2 to 3% in our portfolios, and because of that limited supply, that's why firms like Guggenheim and Citi have gone out and put price targets out there of maybe 300,000 to 500,000. Because one, if the ETF gets approved, then the ETF provider is going to have to purchase that coin to support the ETF product for the underlying. And then also, think about it. If we all took our 401ks and we put 2 to 3%, there's only that limited supply, and it's only going to drive up the price as well. So I really enjoyed this conversation and look forward to your questions.
Awesome. Thank you so much, John. Thank you. So we've got a couple questions in the chat.
Sure.
One right here. Let's see. Rob Johnson asking, how is crypto taxed?
That is, I wish I had a clear-cut answer for you, and I'm not an accountant. There are software programs like I've used in the past that if you're looking to do transactions like a Sovos and others, where what you can do is you can take all of your transactions from multiple exchanges and launch this software and input your data in there, and it will come up with a calculation for you on what they believe should be your taxes when you're speaking with your accountant. And you should definitely consult with your accountant as well. I think, you think about also, I didn't touch on this before, but even the executive order that came out maybe a month and a half ago, federal government is starting to look at this, and they realize the potential too. If they didn't see the potential and the growth, they wouldn't have these federal regulatory agencies like the Treasury and CFTC and SEC going to them for their viewpoints and questioning them on what they think the future is. And they have to, within the next 5 or 6 more months, come back with their assumptions and present to the executive branch and the president what they think. So speaking of taxes, I would look at different software packages that are out there, and I would definitely speak with your accountant.
Yeah, absolutely, guys. It's always something you always want to consult with your CPA whenever you're making any profit with trading, right? So next question is, we have another one from Rob again saying, does the crypto have to stay on the platform that it was purchased?
Rob, great question. So the way that works, there's two models here. We're talking strictly today about self-directed. Self-directed is a closed loop. And what that means is once the account is approved by Quest and they approve it, you're set up with your portal, you can then move the dollars into your account. You could trade on the exchange, but you cannot withdraw the dollars of the coin out of the exchange. It stays on the exchange. And what we're doing is we're providing tax statements to Quest Trust. And then if you decide to exit the position, you would sell the coin, and then the dollars would come back to your account at Quest Trust. If you wanted to take it a step further and you want to take the coin off of the exchange, you have a couple of different routes. If you decide to create an entity account like an IRA LLC or a solo 401k, you have the ability, because we give those accounts because they're taking over more of the taxes and the control of the account and more responsibility for the account, they can actually withdraw the coin to stake it in another pool, put it in their personal storage device. So you'd have to set up the entity account. And then the flip side of that is, if you decided to come to ErisX and open up a direct account, a direct member account, you also have that same flexibility with being able to withdraw the coin from ErisX or deposit coin.
Perfectly answered. Perfect. Yeah, guys, remember, if you are investing within your IRA, like John said, the investment goes in, it's funded into the account, you trade any profits that you make, even if you just want to liquidate, whether it be profit or losses, you liquidate the funds, they got to go back to the IRA. All right. And then from there, obviously we can transfer and distribute as you please. Now, next question is from Ron Tonetti, and this is referencing the conversation we had earlier, asking, what is staking?
So staking is so many different flavors of staking. It can get very complicated. And as I mentioned, the term rabbit hole, you could quickly go down the rabbit hole with it. So let's just take the most simplest one out of all of them. You could take your Ethereum, and because they're coming out with ETH 2.0, you could stake your Ethereum. And what they're trying to do is they're trying to get everybody to stake their Ethereum at once. It'll generate yield in crypto with Ethereum. You're going to get extra Ethereum on a daily basis put into your account. But what they're trying to really do is create consensus so that if everybody stakes, then they have a larger maturity to vote on what should happen within the blockchain. So they're almost creating this voting majority within. So that voting majority is making decisions on the direction of the coin, of where it should go, the protocol. It can get a lot crazier than that. I mean, the DeFi protocols and what you could do is staking. There are certain staking pools where you might put up coin, your Ethereum, and they might kick back a different coin that's actually being generated. It might have a certain rate, and then that coin might have some sort of value based on people in the pool. And those are just two simple iterations, but it really can get very complicated in a hurry with staking.
Absolutely. So We have another question here. Now, Ram, he asked, which coins do you suggest? But one thing to keep in mind, Ram, is the role that we're playing here. This is for educational purposes only. All right, neither of us can offer you any sort of tax, legal, or investment advice. So I guess, John, what I'll ask you is that what made you guys start by choosing, Bitcoin, Ethereum, Litecoin as the first coins that you guys were looking to pursue?
Absolutely, that's a great question. So I would say one of the reasons that we picked those coins are, if you're going to look at the notional traded in the market, I would say probably the concentration is going to be roughly about 55%, 60% Bitcoin. So all the crypto volume that is going off in the market is really focused on Bitcoin. You add into Ethereum into that, maybe it's now 70, 75%. We're locking up 75% of the volume between these two coins. Obviously, there's other great projects that are out there. But I think that if somebody's going to dip their toe in the water, and I'm not trying to give investment advice, I'm not a research analyst, but I really think that if you're going to go with something that's a little bit safer, you're going to want to go with something that's more mature and a little bit more stable. I would purchase a little bit of Bitcoin or Ethereum and understand how the process works. It doesn't have to be a lot. It could be $100, $200. But even, just making that acquisition and seeing the process and getting comfortable with it. And then once you feel comfortable with how it works, then learn to venture out, maybe do some research. There is a lot of information out there on all these different tokens and different projects. I mean, think about it. The power of YouTube nowadays, you can get all of your information online.
Absolutely. Yeah. Thank you for that, John. So guys, another resource you can use. John is going to be speaking at our Quest Expo.
That's correct.
And John, we really appreciate you coming out, guys. That's a must-attend event. You got to come check it out. It'll be September 23rd to the 25th. We're going to have 30 speakers. Like I said, John will be there to go over cryptocurrency. We're also going to cover topics like private money lending within your IRA. We're going to talk about inflation and the role that alternative assets can play within your IRA. We have Danny throwing in some links there so you guys can find the website about the Quest Expo. And you guys are lucky to have attended this event, because after this, only this weekend, if you open up an account here at Quest with the promo Mothers22, you can get a 50% off of that Quest Expo ticket. Guys, that means we're talking about $87.50 for a value of $200. Guys, this is something that you can really take advantage of, because we have the early bird promo that's in our early bird pricing that's ending at the end of this month. So you can get 50% off of that early bird pricing. All right, guys. Let's see. We might have some questions in the chat. It looks like so, guys. Yes, this will be available. You can check out the recordings. This will be uploaded to our YouTube and our Facebook as well. So with that, John, thank you so much for coming.
Okay, just say a couple things before closing. Absolutely. So first off, if anybody ever has a question, you could definitely follow up with Quest Trust. Feel free to reach out. For those that do have pen and paper, and I should have put it on the slide, but my email address is john.denza@erisx.com, or I could be reached at 646-475-2459. I just want to thank you for the opportunity, and for all the mothers that are on the call today, I just all want to wish you a happy Mother's Day. You deserve it. Thank you for the opportunity.
Absolutely. Thank you, John. And yes, happy Mother's Day, everybody out there. All right, you guys have a good weekend. And John, thank you again.
Thank you. Take care.
Take care.